Welcome. In this video, will the ZBCN coin rally continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Taking a careful look at the chart, we can see that the price has now reached the same area as an important top that it formed in the past. This is a very critical resistance point in terms of technical analysis. Especially in the past, we can clearly observe that when the price reached this level, it exhibited horizontal movements here for a long time. That is, it was seriously lingered here. At that time, it was an area where buyers and sellers were in an intense struggle in the market, and the price needed time to make an upward breakout. After gathering strength at this level for a while, the price was only able to gain upward momentum. A similar scenario may be playing out again right now. The price is once again based on the same peak level. However, there is an important difference at this point. There is no accumulated volume or strengthened momentum yet. This makes us think, if the price wants to break this resistance to the upside again, it will probably need to linger in this area for a while, just like in the previous scenario. In other words, consolidate in this area. This is because strong resistance levels are usually not easily broken on first contact. Since such levels have been areas where sellers have been heavily engaged in the past and changed the direction of the market, it is important for the price to spend time here again, to create new buying pressures, and for market participants to become psychologically ready to break through this level. Moreover, such sideways movements are not only technical, but also psychological preparation. Since most traders know that the previous high is important resistance, they are more cautious when approaching it. Therefore, the fact that the price is back in the same area, although a positive signal of continued bullishness, does not necessarily mean that this level will be overcome immediately. In order to break through the resistance, buyers need to regain strength in this area. The uncertainty in the market needs to decrease, and the price needs to show that it has the potential to break this level. As a result, the price is currently positioned just below that critical resistance level, where it has spent a lot of time in the past. If it wants to break through this level, it may remain sideways in this area for a while, as it has done in the past, and it may experience a consolidation process. This means that the price can be expected to linger here for a while, and then break out upwards with a strong volume. For this reason, it is useful to carefully follow how the price will move at this level in the coming days. But we need to look not only at trends, but also at other metrics. Keep watching. One of the most striking patterns on the chart, the inverse shoulder-head-shoulder pattern, is considered a very strong and reliable trend reversal signal in the technical analysis literature. Especially when seen within a prolonged downtrend, the formation of this pattern is a strong signal that the market is now shifting from sellers to buyers and heralds a possible uptrend. Looking at the current chart view, we can see that this classic and powerful structure has formed quite clearly. Three important bottom zones, the left shoulder, the head, and the right shoulder, are clearly evident, and this structure provides the most basic pattern rules of technical analysis. The head, in particular, is the deepest point of the pattern, representing the peak of the downtrend, where the sellers begin to lose their strength. The shallower bottom at the right shoulder, which follows this point, signals that buyers are starting to step in and a gradual transformation in market psychology is taking place. The resistance line, called the neckline, represents the most important technical threshold that needs to be crossed for this structure to be completed and considered a valid pattern. As the chart clearly shows, the price managed to break this neckline and made a short-term bullish move following this breakout. However, it is noteworthy that despite this bullish move, the target level of the pattern has still not been reached. In technical analysis, the target of the pattern is calculated by projecting upward the vertical distance of the head from the neckline. Therefore, it can be said that the price still has the potential to move towards this target. When we examine the current price behavior, it is observed that there is an upward strengthening trend in the market, but the price is delayed in reaching this target due to occasional profit sales or squeezes in resistance zones. However, in such strong patterns, it is often unrealistic to expect the target to be realized immediately and without interruption. Patterns like H&S often reach their targets with choppy and volume-supported price movements. This means that it may take some time for the price to reach the target level of the pattern, but as long as the technical outlook remains intact, the target will remain active. In addition, the breakout point of the pattern, the neckline, is now working as a support zone. This means that the price may find buyers again at this level on possible pullbacks. In such cases, it is important for traders to pay attention to these support-resistance reversal zones while the pattern target is not yet complete. If the price manages to hold at this level, it will be an indication that the bullish scenario is still technically valid. In light of all this information, the current price structure suggests that the inverse shoulder-head-shoulder pattern is still active and retains the potential to reach the target. If the general mood of the market remains positive and the volume supports this movement, the price can be expected to reach this important target by maintaining its upward momentum in the coming period. Of course, it is quite natural for the price to make intermediate corrections and experience some short-term fluctuations on the way to this target. However, given the overall technical structure and the strength of the pattern, there is a strong possibility that the upward movement will continue. As a result, once an inverse shoulder-head-shoulder pattern is completed, it is usually a matter of time before the price reaches the target. At the moment, the chart clearly shows us that this target has not yet materialized, but is still actively on the table. Therefore, traders should not ignore this technical structure and carefully monitor whether the price is moving in the direction of the pattern's target or not, which may help them make better decisions. The MACD Moving Average Convergence Divergence Indicator is a powerful oscillator often used in technical analysis, providing information about both trend direction and momentum. A careful examination of the chart reveals an upward convergence between the MACD line and the signal line above the zero level. Such a scenario is usually considered a positive signal for a bullish continuation, especially when the MACD line is close to or about to cross the signal line to the upside. Market participants perceive this as a potential buy signal. This is because it signals that the current bullish momentum of the price is gaining strength, and the momentum is increasing in a positive direction. In the current situation, the fact that this possible crossover occurs above the zero axis has an extra meaning in terms of technical analysis. This is because intersections above the zero line usually herald stronger and more reliable uptrends. This also indicates that the market is already moving in positive territory, and buyers are still dominant. Looking at past price action, intersections with similar MACD structures have often led to significant bullish movements in prices. In this context, the current chart structure and MACD behavior give strong signals that a similar scenario could happen again. Confirmation of this potential intersection, that is the MACD line crossing the signal line significantly upwards, would be an important confirmation that the technical bullishness will continue. Of course, like any technical signal, MACD should not be considered in isolation, but in conjunction with volume, support resistance zones, trend lines, and other technical indicators to provide a more reliable and powerful analysis. However, the current outlook, especially with the MACD curving upwards and the distance from the signal line narrowing, suggests that this possible crossover is becoming increasingly likely. There is also a noticeable recovery in the MACD histogram bars. The histogram is approaching the zero level from the negative area, indicating that momentum is shifting from declining selling pressure to upward pressure. If the histogram bars turn positive, this would be an additional signal in support of the MACD crossover, further strengthening the bullish prospects. As a result, this potential upside crossover developing on the MACD indicator is highly significant, especially as it occurs above the zero level. If this intersection is confirmed in the short term, it is highly likely that the price will accelerate upwards and move towards new resistance zones. Therefore, this zone and MACD behavior is an important technical development that should be closely monitored for investors. We should wait for the intersection of the MACD indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.